Welcome our next guest on the show. Dean Kim, Head of Global Research Product at William O'Neill, is with us. Dean, thank you so much for joining in and thank you for your patience. We just had so much of news flow to deal with over here and some breaking news here on local stocks. But, you tell us, how is the overall picture looking like, specifically in India? And I wonder if you're tracking the divergence that we're getting in the market here. Bank stocks have started performing a little better, but a lot of the mid-caps are correcting and cooling off. What do you make of things?
Yeah, I was looking at SMIN and it's fallen below the 50-day moving average, since, quite a while on higher volume. So it looks like, there's a bit of market rotation going on away from small caps and perhaps into larger cap stocks. The market sees some opportunities in terms of depressed large cap banks. So banks like HDFC, making some improvements. But from our methodology, still will take some time. We want to see the stock at least trading above the 200-day moving average, because that's where a lot of resistance going to be. There's some other stocks that looks very interesting, like ICICI Bank. That one is breaking out from a early stage base. It looks actionable. And IndusInd Bank also reclaimed the 50-day moving average on greater volume. So that looks pretty interesting as well.
No, absolutely. By the way, Dean, are you saying the Nifty Bank hits a new high?
Potentially, because, when I look at banks like ICICI making good progress, I think last time we talked about the public sector banks, they're all doing well. We just want to see, from my perspective, I want to see the Indian yield curve improve a bit, still flat. So we want to see a steeper yield curve, and that's probably going to be the biggest catalyst for large cap banks.
Okay, Dean, just on the global front, what are you reading? Because we've seen a bit of a cool off in both the yields and the dollar, given the Fed chair's comments overnight. So, short term, what's the outlook you have on U.S. equities as well as the 10-year yield?
Yeah, I mean, U.S. equities, they've been doing quite well, very resilient. Basically, 71% of New York Stock Exchange stocks are trading above 150-day moving average. But what we are closely monitoring at the moment is the fact that we have elevated distribution days. So we count distribution days, and right now we have a cluster of 7 distribution days on the NASDAQ, 5 on the S&P. And so we just want to make sure that these indices can hold support above the 21-day moving average, because if they start receding and go below the 21-day moving average, we'll probably call the market in terms of under pressure. But at the moment, we're looking like it's basically fine. There's nothing wrong with the action currently. It's just a little bit of distribution day elevation. I think tomorrow and Friday is going to be important because we have the job numbers coming out, as well as non-farm payroll on Friday. That's going to dictate whether the market continues to believe that the Fed, although they're stating that they're going to keep the rate steady, I think the market is starting to price in the fact that we may see potential cuts 6 months from now. Basically, when you look at money center banks, large cap U.S. banks, they continue to be very resilient. Even the super regionals, some of the larger cap regional banks, they're starting to bubble up and break out. It's basically the small banks that are still kind of in trouble at the moment. So when you look at that, I think the market is, trying to price in that we will see some rate cuts in the second half.
Got that, Dean. Thank you so much for joining in. We'll keep the interaction short today. We'll thank you for your patience as well. With that, take a short break. Come back on the other side. Deepan Mehta.